So John, why don't you come in and spend a couple of minutes on the fixed income market and what's been going on the last 10 days or so.
Sure, thanks, Matt. In the fixed income markets, about 2 or 3 weeks ago, beginning of November, we started at Cumberland to extend our maturities and durations on bonds. And that was the reason why we did some of these moves with a 10-year bond that was approaching a 325, a 30-year bond that was approaching a 345, and municipal bond yields up higher as well, and long municipal bonds around 4.25. Our thoughts were the economic activity really didn't belie what you were seeing in the bond market itself. Because the reality is we saw the price of oil dropping. That's usually an economy that's starting to slow down a little bit. We have seen slowdowns in the housing markets in the big Northeast states like New Jersey, New York, also in California and Mass. And the high taxes are indicative of what's coming in next April, which is the disallowance of state and local taxes and property taxes on people's federal returns. It's going to make the tax bills higher. It's caused people to pause on the housing side. The third thing is that we've started to see, with the increase in short-term rates, the rollover of government debt. As government debt has gotten larger, the interest expense is now getting larger. That wasn't a problem a few years ago with very low short-term rates. It is a much bigger problem now with higher short-term rates, and we think that may weigh on the economy. You add all that up, and it doesn't take away from a good equity market, but it kind of brings down the growth and the people that thought we were going to get all this inflation, because it's clearly not there. Core inflation has dropped from about 2.4 down to 2.1. Looks like it's going lower. So it's been a very good environment for bonds, and it's been a good exercise in extending our maturities and durations because it's already paying off.
Perfect. Great, John. So we continue with our thoughts and ideas on Fridays. Good battle of supply and demand in the equity markets. Expect next week to have some more fireworks. People are probably familiar with a G20 meeting over the weekend. Some of that's baked into this week's strength. We'll see how much. From here, we'll probably have to really battle through that 2,800 on the upside. We'll see you next Friday. Matt McAleer and John Mousseau.
Thanks, everyone.